There is this perception, perhaps not entirely correct, that bankruptcy is something which affects small to sort of middle market type companies, and of course there are some very famous exceptions to that in terms of Lehman Brothers, but is that a fair analysis and perception that people have?
I think there's more than a germ of truth in that. Yes, there are the very high-profile examples. Lehman, you mentioned, going back a little bit further, Barings Bank, remember that? Those big cases, they set some pretty unhealthy precedents. Let's take Barings. What happened there was that the directors tried to defend themselves when there were disqualification proceedings on the basis that they couldn't be expected to know what Nick Leeson was up to in Singapore on the Osaka futures market. And the court completely rejected that defence. And they said, you, the directors of the main board company sitting in Threadneedle Street, wherever it was, you cannot delegate your duty to supervise. That is the law in England. Now, you just apply that to what's been happening in the recent problems here, and you wonder how many main board directors actually really understand what the securitization issues are that some of their rocket scientists have been involved in. And you wonder what sort of defence they've really got on that need to supervise what's going on in their institutions. Generally, I think your point is right. You'd be unlucky on a big company to find yourself bust and therefore facing some nasty problems. Smaller companies, much bigger risk. But don't forget this. Just because you're part of a big group, don't assume you've got the protection of that whole group. If you're a director on a smaller subsidiary, you may not be sitting quite as prettily as a director of the parent. Now, I mentioned earlier Arkandor and Thomas Cook. Thomas Cook seems fine. The directors have done their jobs properly. The Thomas Cook business seems absolutely fine. Take another German company, though, Hypo Real Estate, the second largest mortgage lender in Germany, had to go to the government in Germany for funding around all the problems with the credit crunch. And what happened? A little known or heard of Dublin subsidiary called DEFPA Bank, which was part of the Hypo empire, was just sort of cast adrift. So don't assume if you're a director of a subsidiary within a group that you're as secure as the rest of the group.
Good point.
Would you agree with that?
Yes, I would. I mean, certainly Francis would know best, but it's very logical, and I certainly think that applies to the United States.